Hi, everyone. Welcome to today's webinar. My name is Joseline, and I'm hosting a market update today just to update everyone on how the market is doing. Right now, 7:01. I'll give one more minute just for people to join. Sometimes it takes a minute for people to come in, but I'll just give one more minute. Maybe we'll start around 7:03. Just some housekeeping things. If you have any questions, put them in the chat box and I'll be happy to address those at the end of the presentation. I also have questions that were submitted way ahead of time, and I will get to those at the end of the presentation. However, in the meantime, if you have questions, do put them in the chat box because I like to know what the people who are actually here are asking about. And sometimes I address those questions before I get to the other list of questions. And for any reason, if I can't get to the questions, if I can't finish all of them, especially the ones that were submitted ahead of time, then I will call you one-on-one and we can discuss, or I can answer those questions one-on-one. Okay, so we'll just give it a minute and then we'll get started. I also wanted to mention that this webinar is being recorded. So for those who are looking for recording, that will be made available. A lot of the times we actually post this on our YouTube channel. So if you go to YouTube and type in Joseline, you'll see all the recordings from previous webinars as well. We've been hosting webinars on a monthly basis for the last 3 years. So all those recordings will be there. Okay. Alrighty, so it's 7:03 and we can get started. So we're looking at a market update. I'll start with looking at some of what's happening as of this year and then trying to predict what will happen next year. So for those who don't know, I am a real estate broker and I am a full-time real estate investor as well. My journey in real estate started as an investor. I was working full-time while investing in real estate. And then at one point, I made the decision to switch over and be in real estate full-time. We own a few properties in Hamilton, Guelph, and Kitchener-Waterloo area. And I say this just because, you know, a lot of people who will be attending this are investors. You might have questions regarding to these markets. Please feel free to ask me because I operate in this market or in these 3 markets on a regular basis. If I was to pick a superpower, it would be building wealth through real estate. And I say this because I see what it's done for my family. I see what it's done for my clients. And I'm always very passionate to talk about building wealth through real estate because it is actually one of the best ways to build wealth across the nations in the world. So if this is something that you'd like to chat about, I'm always happy to chat and talk about what could be done. Alrighty, so today we'll be looking at a quick market update. We'll look at what's happening with inflation and affordability. We'll look at home prices, statistics as well, such as, you know, the number of homes on market. We like to track that because that is the supply. And we'll be looking at interest rates as well as mortgage rates because that will be a big factor that determines demand. And, you know, if you ever studied economics, you know that supply and demand is what determines where the price goes. So we'll be looking at that. We'll also look at some advice for some buyers. If you're a buyer right now looking to buy a home, what are the things that you should be thinking about? And also we'll look at some advice for sellers. If you're a seller in this market, what should you be thinking about? And if you're thinking about selling in 2024, what are the things that you need to be thinking about? Now, there are people who are selling and buying. That is also a very unique situation, and we can talk about some things that you should be thinking about and what we could do to help. Alrighty, so by now, I think everybody knows the rates have been going up. And we went from, you know, having 0.25% to now we're at 5% overnight rate. And right now, as it stands, the Bank of Canada has said that they will not hike rates if the economy continues to go as is. They want inflation to cool, and that is happening. So from that point, we don't foresee any future rate hikes. But if inflation does not go down, rates could go up. So that is something that they keep repeating every time. The last update was actually today, where they decided to hold the rates at 5%. So this is the last announcement for this year. Any other announcements will have to be in 2024. We are seeing, since they held the rates, we're seeing buyers come back in the market. So we're seeing activity pick up a little bit as compared to the previous months. I'm talking about October. September was also quieter than what we would have expected. However, we're seeing that buyers are coming back, and also we're seeing that the right properties are selling. So if you're a seller, you're wanting to go to market, your property has to be well positioned and well marketed for that targeted buyer, because we're looking at, like, some of the listings that we're selling, we're seeing the things are actually moving. And for sellers, that is good news, but we do expect that things will get better in 2024. Okay, so talking of inflation, our inflationary numbers have come in. My background is economics. So I actually went to school for economics, and I worked for the Ontario government doing economics, and I love tracking numbers and looking at how our economy is performing. So the numbers have been coming in the last couple of weeks. I'll say maybe the last, maybe even 10 days, where GDP numbers have come in, where GDP is shrinking. To me, I think that is good news, because that is what the Bank of Canada is trying to achieve. They're trying to push us into a recession, to cool down inflation, and what they expect is actually happening. So inflation is going down. As you can see here in the graph, it peaked at 8% last year, and now it's going down. Since they started raising rates, it's been going down. Right now, we're sitting at 3.1%. One thing I want to bring your attention to is this blue zone. This blue zone is the targeted inflation rate. This is where they want us to be, right? And you can see too, like, you know, we are getting closer and closer to that blue zone, which, you know, brings me the hope that, you know, probably rates will start to come down. And that is the belief, and that is the prediction among economists in the different banks, the different government positions. The prediction is that rates will start to come down, because the Bank of Canada has worked so hard to get inflation within this blue zone. And as you can see, things are actually coming back to normal. Another thing that I've been noticing is that unemployment is rising. Big corporations have been laying off people. Some of the smaller businesses are closing. So we're seeing definitely that unemployment is rising. It's a bad thing for people, but this is what the Bank of Canada wants. This is what they want. They want, you know, they want basically spending to decline. So right now, what we're seeing also is that we're no longer in that phase of excess demand. Right now, if you can remember, there used to be a time, I would say probably around 2021 or early 2022, when the demand for goods and services was much higher than what the supply was. I guess to put it in simple terms is more people wanted goods and services than there were suppliers, or, you know, for example, contractors. Like, it was much harder to even reach a contractor because the demand for contractors was so high. So you had to wait, you know, a couple weeks, couple months to get any work done. Right now, we're seeing much of that go away because two reasons. One, people have stopped spending as much, so the demand has gone down to match the supply, and that is a point of stability that the Bank of Canada has been pushing for. And, you know, to see that that is happening is a good thing. However, for a lot of businesses, that's probably not a good thing. On the real estate side, we're also seeing that, you know, we went through months of really, really low inventory, very few homes on market. And now we're seeing that the inventory is picking up, especially because some of the homes are sitting on market longer. So we're having higher inventory to match the demand that's out there. So right now, I'd say we're kind of in what is known as a balanced market. However, for Ontario, especially Southern Ontario, we always have such low inventory on the market. So the true definition of a buyer's market or a balanced market is not there quite yet, but this is as balanced as we've been in the last few years. I'll show you some graphs explaining that in a few slides coming. Okay, so prices. If you can look at the price trend right now, This is the data for, the yellow line, that's all of Ontario, and you can see that the price is lower than compared to Hamilton, Waterloo region, and Wellington. Wellington will include Guelph, Aurora, Guelph Ramosa, Rockwood, and Center Wellington. So you can see here that prices have actually fluctuated up and down over time. When I pull up this graph, I want people to notice what's happening, especially here, like sometimes we have a little bit of a bubble. This was 2017. For those who remember, we did have a little bit of a bubble, and then the government introduced some regulations that changed the market, and then prices went down. But you can see that even though prices are fluctuating over time, the long-term trend is upward. Another interesting point I want to bring to your attention is what's happening in 2022. You'll see here that in 2022, prices across the board, be it Waterloo, Hamilton, Wellington, and for all of Ontario, so to speak, prices went down. Went up, and that was the peak of the market. That was around February of 2022. Things peaked, and then prices started going down when they started introducing all these rate hikes and the different measures that the government has taken to cool down the demand for homes. So you can see here that prices went down. There's something interesting that I want also to bring to your attention, and that's what's happening in 2022, 2023. You will see here as they continue to make those rate hikes, prices were dropping. Now, something happened around, I would say it's probably April, May, when they stopped. They had that one pause, if you remember. Rates weren't going up for about 3 months, I think, or 4 months. I want you to see what happened to the demand. The demand went up because people had more confidence that maybe this was it. There won't be any more rate hikes. However, they came back, I think it was around July, and they increased rates again. When they started increasing rates again, prices started going down. The reason I bring up this curve is because looking at the past or looking at the data, it educates us to think about what could happen in the future. Right now, we have enough data up until the end of November. We don't have December data yet. And you can see right now that prices have been declining, right? What we're thinking will happen is as soon as rates start going down, prices will come up. And we've seen that even, more recently when, they paused rates, even some of the banks, the variable rate mortgages, even the fixed five-year mortgages, the fixed 5-year mortgages, they were starting to come down. Then prices went up. This happened like the peak you can see right now is around May of 2023. And as soon as they started increasing rates again, prices started coming down. So this is something that I look at the data to see like human behavior, how we're reacting. If rates go down, prices will go up, and vice versa. If rates go up, prices will go down. This is good because the talk or the prediction for 2024 is that rates will go down. And I will show you some graphs and some evidence that I'm getting from all the different parties that we work with to say, prices will likely go up. And that's the prediction, that prices will go up if rates come down. Now, this is a graph of the total number of homes on market. One of the reasons why I like to show this graph is to show that what the speculation is in the market is actually not as accurate as what the media would make it sound. For example, I want you to note, so these are the different markets. We have Hamilton, we have Waterloo region, and we have Wellington. You'll see here that this is the total number of homes on market, the number of inventory we've had over the years. Right now, we have higher inventory than what we're used to, right? This is 2020, 2021, and 2022. You see that the inventory levels were so low. This is not normal. So now the news will make it sound like, oh, the market is crashing. There's a crash coming. A lot of homes on market, nothing is selling. when I look at this graph, I think that we're actually going more towards normal. Like this is what we had in 2021, 2011, 2012, all the way to 2020 even, you know, the pre-pandemic era. So I feel like the market, instead of people saying like the market is crashing or there's a lot of bad news happening, things aren't selling. I think what's happening is that we are used to seeing such low inventory, which we saw in 2021 and 2022, which was not normal. However, now we're going back to normal. So it's not an unprecedented situation, or it's not what the media makes it look like. When you look at data, which data is always accurate, you know, it gives us an accurate picture, so to speak. We are more going towards normal. And what we're seeing right now is a normal market, normal levels of inventory. In fact, I would say we're even lower than what we're used to, right? So this to me is interesting because I think it brings us in a market that is a little bit more balanced, where buyers have enough options and sellers can still sell their home without having to worry about things sitting on market forever. We're not in a buyer's market. Most of Southern Ontario hasn't seen a true buyer's market in a long time. So we're not in a buyer's market by definition, but we're towards that market that's a little bit more balanced. And this is as balanced as we've seen it in a few years. Okay, so interest rates and mortgage rates. So what we're seeing right now, finally, is that mortgage rates are going down. When I speak to my friends who are mortgage brokers, and even those professionals that we work with on a regular basis, they're telling me that the fixed 5-year term mortgages, they're coming down. They're talking about right now for a first-time home buyer, you like especially if the profile looks good, people are even getting rates of like 4.999, you know, 4.99, and that is something that we haven't seen in a couple months. I say last time I heard about that was probably in April, May, right around that time when prices were starting to pick up again. So right now, to hear banks talk about potentially a rate that starts with a 4, like that is good. That is good news. And that is happening. As you can see here, the bond yield is going down. It's been declining for the last, I'm going to say 10 weeks. It's been declining. So this is good news. It means that, you know, the 5-year, so the return on investing on a 5-year term is lower than if you were to invest for 2 years. And usually investors use this as a predictor of what's happening in the economy. People have less confidence in the economy. Therefore, the Bank of Canada might use that to determine the economy. Anyway, this is what the Bank of Canada is trying to achieve. And finally, this is happening. While it's not good news for businesses and other professionals who rely on this, however, for the economy and for what the Bank of Canada wants to achieve, this is good news. This is also a graph that I obtained from one of our colleagues that we work with. He's a mortgage broker, and he was telling me that this is a graph of what banks are predicting their year-end target rate will be. Right now, if you look at the 6 big banks, you'll see that they're predicting that at the end of 2023, their rate, this is a 5-year term mortgage, their rate will be around 5%, right, for all the 6 banks. However, if you look at the year end for 2024, for example, CIBC is even predicting that they will be around 3.5%. That's very good, you know, given where we're coming from. Because right now, even with people who are buying, I'm going to say 3 months ago, their rate was like 6%. I even have a 7% mortgage, you know, and it's with one of the good banks. So this is happening. And to look at the prediction, so if you look at the year end for 2024, for BMO, it's going to be about 4.5. CIBC is thinking 3.5. NBC, RBC, Scotia, they're thinking about 4%, and TD is thinking 3.5%. That's very good. Another thing too, if you look at the year end for 2025, they're thinking rates will drop even more, which is good news. So basically what I'm seeing right now when I'm looking at this is that there's confidence with the banks that rates will actually go down. And even with what's happening with the economy, you know, our GDP shrinking, our unemployment going up, a lot of businesses, you know, there's just been, if you look at just the economy as a whole, and not only on a macro level, but if also look at a micro level, just look at the cities, the businesses, like a lot of them are just going through a hard time. So the consensus that rates will start to go down. And as you can see in the prediction, all the big banks agree that the trend is a downward trend where rates are actually going down. So this is actually a good thing. I've had questions from clients who ask me if they're renewing their mortgage, if they're buying a new home or, upgrading into another home, which rate should they take? Based on this prediction, you'll also see that the lower term mortgages are going to be more expensive than the longer term, like in this case, a 5-year term. So if you're asking me if you should lock in a 5-year term, I wouldn't do that. I would probably even take a variable rate mortgage. Why? Because the prediction is that rates will come down. Now, when exactly will rates come down? Nobody knows exactly. However, the consensus is that it's going to be around mid-2024. So I'm thinking anywhere from like April, May, June, July. Around that time is when they're predicting the rates will start to come down. Now, if you were to take a variable rate mortgage, the variable rate mortgages are going to be some of the highest, going to be very expensive, probably around 7% compared to a 5-year term that is at 5%. However, if you do the numbers, you'll see that while the variable rate mortgages right now is a little bit more expensive, when you do the numbers for 5-year term, or when you do like a long-term calculation, you'll find that you're actually better off taking that and then dropping as the rates drop. One thing I've also noticed just looking at data is how fast historically, and this is just looking at historical data, maybe I'll have to go back to one of these graphs. If you look at this, when rates go up, they come down quickly. Like look at this, is maybe starting in 2000, even like looking at prior to 2000, rates go down very quickly. So it's like when they sense that something is happening, they need to bring rates down. Like when we go up, we're going up slowly, but when we come down, look at this, it probably like overnight, it probably went from, maybe this, you look like it used to be like closer to 6%, maybe 5.5 to down to 2%, very quickly. And then, while we're going up, when we come down very quickly. Look at here in 2008. All of a sudden, they notice that they need to reduce rates, and they go down very quickly. So based on the data and what's happened in the past, probably would have to look at like more years, not just the last 20 years, maybe look at 30, 40, 50 years. But what I've seen in the past is that rates come down quickly. So if indeed they do come down, it probably would be like within a year, rates will come down significantly, which gives me confidence that taking a shorter term or even a variable rate mortgage should probably be better right now. And the banks know it. So that's why your variable will be more expensive than the fixed term mortgage, because they want to incentivize you to take that 5-year term and be locked in at 5%. If you're locked in at 5%, you're going to be paying 5% for the next 5 years. However, if you lock in, let's say at 7% on a variable, your mortgage payment will fluctuate over time, which is a good thing. And it's fluctuating downwards. Another thing that I want to also look at is like for people who are looking to buy in this market, what should they be thinking about? Buyers. As a buyer right now, if you're a buyer who's ready to buy, let's say, financially, everything is ready, you are pre-qualified, everything is looking good. My advice to you would be don't wait. Don't wait to buy, because when you buy a house, there's a closing time that, for first-time home buyers, I probably need to break this down more, but from the day you buy your house, the closing date, in most cases, they're anywhere between 45 to 90 days. So that already pushes us into the new year. So let's say if you close on your home February 1st, then you probably will be paying the higher rate for February, March, and maybe April. Let's even push it into the new year. Let's say you pay a higher rate for 5 months. You will be in a better position than somebody who's going to buy in February or who's going to wait for rates to come down, because as we saw in the data, as soon as rates go down, the price will increase. Like, this is guaranteed. And how do I know? Because we've seen the data. We've seen the data, how prices will fluctuate based on how the rate is. Also, there's a lot of demand. There's a lot of people who are waiting to make a move, and they're just waiting for rates to come down. As soon as rates come down, we'll start to see those multiple offer situations. Right now, we're in a position where if a listing is on market, we can go in and negotiate set terms that we can't get on it in a market that's busy. So for a buyer right now, I think it's definitely a good time to buy something. I know that the rates are high and things are scary. However, if you look at, you know, a year from now, where prices will be, the prediction is that prices will go up by 5% compared. So between today and the end of 2024, the prediction is that overall in Ontario, it's going to go up by 5%. If you're in Southern Ontario, you know that Southern Ontario appreciates more. So if Ontario is around 5%, Southern Ontario is usually around 10%. So another thing too that I wanted to bring to your attention is, if you look at how fast things like prices will go up. Let me go back. So looking at this graph, you'll see that even though the market corrected in 2017, it was, I think it was like a 20% correction at that time, 25% depending on the market. So prices went down. However, they recovered pretty quickly. By around 2019, which was about 18 months later, prices had caught up with where they were before. So prices will go back up. If you look at where we're coming from, which is very high, usually when prices recover, they recover very quickly. Even look at this graph. Like, this was basically a period of, let's say, I think it was 3 months, March to May. This is March and this is May. You see how quickly prices are picking up already. I actually bought a house myself, you know, just taking advantage of the market, right? I bought a house here at the bottom when things were down, and I sold mine at the high in May. So I bought in March and I sold in May, and I was able to take advantage of what the market was doing at that time. And as soon as we sold, prices started coming down again. But, you know, for us, that worked out. However, what I want to show you is how quickly the market recovers. I'm pretty sure if they had not reintroduced those rate hikes, right now, price would have continued to rise. So it goes up so quickly, and before you know it, you know. And also another thing is, for the average person who has a full-time job and they're busy doing other things, you know, you're working, you're raising a family, you don't see these things until it's in the rearview mirror. You will not see that this is the lowest prices will be until you start to see that, you know, you start to see prices go up and you see it in the data. For us who are boots on the ground, like, I work in real estate full-time, so I feel it, I see it. Why homes are selling right away. Maybe I have a listing and I'm getting more showings than I'm used to. If I was to be honest right now, it's such a good time for buyers, because for listings that we have on market, things are moving very, very slow. Sometimes, like, we used to be able to get like 50 showings in a week, right? And this is not even at the height of the market. I know I listed a few homes right now, like last year when it was like March, April, May, when prices were still low, but the activity was there. People were moving. So compared to those 50 showings that we're used to getting per week, right now we're only getting like 5 to 10. So that's a significant decline. And every seller who's on the market right now needs to sell. I would say maybe 90% of them have a reason why they're on the market. Because if you're a seller and you can wait, you can afford to wait, I'd say wait for when the market gets better. So coming back to this is, if you look at the graph, the market usually recovers quickly. And if you're a seller and you're thinking about selling, I would say, you know, first of all, connect with the realtor in your market. And if you're in this market where I'm operating, connect with me. We can come up with a plan. The truth is, right now, if you go to market, especially being the holidays, December is usually much slower because everybody's going away. I would say just make, between now and when you're ready to list, there are certain improvements that you can do to your home. There are certain things that you can do to make sure that you sell for the highest value. For properties that are tenanted right now, if if you're thinking about selling a property that has a tenant in it, you can start that conversation right now. There are steps you can take to make sure that the property is ready. Maybe even to make sure that, there are options you can look into to make sure that you maximize your return on your investment if it's tenanted, because for tenanted properties, most of them are investments. Oh, that was for sellers. Anyway, so that was for sellers. If you can afford to wait for the new year, I'd say wait. And if you're in a unique position where you're selling a home to buy another, that is exactly where we have to look at the market and say what is happening, because if you wait to sell when the market is better, you also have to buy at a higher price. So I'll give you an example. If let's say you're a seller, you don't want to sell here when the market is when prices are lower, and you choose to sell in May. If the market had not recovered, if the market had not gone down, then you'd have sold, let's say, a $700 home, and most people are upgrading in this case. If you're upgrading to like a more expensive home, a rural home, you probably have to pay a higher price there too, and you have to compete with other people. So if you're selling to buy, I would say even look at your numbers, have a conversation, let's come up with a strategy where you can do what I did when I was moving, where I bought my house in March when prices were still low, and I sold mine in May. And sometimes too, like for example, as we can see, I know a lot of people like to know like for sure what will happen, like a crystal ball. The truth is nobody has a crystal ball. But looking at data and looking at predictions, we can predict that we're going into a year when things will improve compared to what we have right now. Especially when we look at the month of December, we know for sure that coming, February, March, April, that is the spring market. There's usually more activity than we have right now. Also, there is also something coming up like for student rentals. So if your property is in a student neighborhood, January, February is when all these students are getting accepted into the universities. So that is something that you need to think about, that you could also sell it as a student rental, or you can sell it for a parent who wants their daughter or son to live there while they go to university. So there are a lot of things you need to think about. And if you need to have a conversation about this, please reach out to me, and I'd be happy to sit down, strategize, look at the property, and plan accordingly. If it's tenanted, that is also something that is a completely different topic. So particularly if your property is tenanted, please let me know and we can work on that. If you're a first-time home buyer, there are a lot of things that you can benefit from, right? So things that you should be thinking about. You never bought a home before. How do you get in the market faster? There are definitely things that we're seeing people do right now. One of them being a gifted down payment. We're seeing a lot of families, parents raise funds for their child to use as a down payment. Sometimes the parent will use it as a gift. Sometimes there will be an arrangement between the family that the child will pay them back. And I've seen it, I have clients who help their kids buy properties. They started with their firstborn. They helped her buy a house, and she paid them back 2 years later because she refinanced the home. And they used that money to help their secondborn, and now their thirdborn just bought a house. So this is something that, if you're a parent, you're here, you're thinking about making a move, you can help your kids buy something. Another method is also being like a co-signer, finding a co-signer. If you have a mom, dad, or aunt, somebody, family member who can co-sign for you. I'm also seeing, even though this is rare, but I'm seeing friends co-sign for each other. I have clients where they co-sign for their friend, and now the friend is gonna co-sign for them to buy something. Right now, where rates and prices are, I find that families or groups that are working together to achieve this common goal are more successful than ones that are just going at it by themselves. So this is where you might have to tap into your connections, tap into your family, friends, to see where you can, benefit from having that community around you and possibly buying a house. Another thing also that a lot of first-time home buyers don't know is that you can borrow from your RSP. So if you've been working, you've been contributing into your RSPs, you can borrow 35,000 for a single person, or you can borrow 70,000 for a couple, and that could be a generous down payment. There's also an option for co-ownership. That is also something that we're seeing a lot nowadays. In fact, there are programs put in place. So there are contracts, there are lawyers who are qualified to deal with this co-ownership situation, where families who don't know each other at all are able to put funds together and buy a house legally, where the lawyers will be, and then there are also lenders who are supporting that. The lender will look at the file. They know that this is two families that have come together to buy a house. Some of them are buying multiple units, like a 2-unit property or 3-unit property, where there's 2 apartments, 3 apartments, where both families can live there. And the contracts are put in place such that if there was a disagreement or somebody wants to move on, those situations are already well thought out, and there's a solution as to how to proceed in that case. So it's becoming a more popular way, especially with where prices are. When you think about it, 10 years ago, the average home was probably like 350, and now prices are going well into the millions, depending on the market. So we're having to become more and more flexible and also more and more creative to get people into home ownership. One of my favorite ways is to get a fixer-upper. This is when you buy a property that needs a lot of improvements. This is how we got into the market. My first property that we bought needed a lot of work, and we worked on it. We did the first, when we just saw, and in some cases you can also get the purchase price plus improvements mortgage. This is where they give you the mortgage amount, but they also give you more for the amount of work that you want to do. At the time, we didn't even know that this existed, the purchase price plus improvement mortgage. We didn't know that that existed. So we ended up buying something for $350, and then we probably had like 10,000 somewhere. We painted the house ourselves. Some of the work we did ourselves, not that I encourage it. If you have the funds to be able to afford getting somebody else to do it, but we didn't have that. So we had to do some of the work ourselves. We replaced some of the fixtures, we replaced the bathrooms, some of the minor work, and we did it slowly. A year later, we replaced the roof because the roof was gone. A year later, we got appliances. So we kept working on it until it was better. What I love about these fixer-uppers is also not only are you improving the house, but you're also creating equity. Because our house at that time, we bought it for $350 because it was in that condition. But years later, 2 to 3 years later, it was worth about $700. So, when you get something, there's less competition because a lot of people don't want to do work. So when you get something such as a fixer-upper, you're in a better position to create equity in the process because you're adding value to the property. There's also something called the first home savings account. This is where you put money tax-free in an account. I think it's $8,000 every month. No, every year. $8,000 every year per person. So over a period of 4 years or 5 years, you have about 40,000. And if you have a spouse, that is 80,000, and you can use that for down payment. One of the questions that I get the most is how much down payment do I need? So if you're buying a property that is under 500,000, you only need 5% down payment. That's the minimum. If you're buying a home that is more expensive than 500, then you need 5% for the first 500, and you need 10% up to $1 million. So in the end, it ends up being like 6.7 or sometimes 7%. Down payment if you're buying a house for like 800 or 900. So the key to remember is if you're buying a house for less than 500, you're looking at 5%. From 500 to $1 million, you're looking at an additional 10%. Not additional. You're looking at 10% for the amount above 500 to $1 million. And then if you're buying a home for anything above 1 million, you need 20% down payment. Okay, so that is the end of my presentation. This is my contact information. If anybody wants to get hold of me, I'm on social media, I'm everywhere. So if you wanted to connect with me, if you have any questions, please let me know. And I'll be happy to look at your specific situation. As I said earlier, we do have questions that were submitted ahead of time. So I'll just quickly go through those. And then if there are any other questions on this, for people who are here, please put them in the Q&A and I'll get to them. Okay. So the first question that was submitted, I'm just looking at my phone because that's where the questions were sent. But the first question was, I'm a first-time home buyer, and here in Canada, first-time home buyers are facing the dilemma to buy or to wait until rates fall. What is your advice? So as I said earlier, if you're a first-time home buyer, my advice to you is, first of all, I'd say if you're in this market, like around this area where, you're in Kitchener-Waterloo, Guelph, Hamilton area, I'd say I'm happy to sit down with you to work one-on-one to see what that looks like. Because definitely the first thing I would do if I was first-time home buyer is find out in today's market, what could I afford? And if you can afford something and your financials are in place, I would say don't wait. Because as I said, a lot of people I remember, I had a lot of friends who kept saying, we're waiting for the market to crash before we buy something. But the truth is, as I said, most people don't even know when the market has crashed. They're waiting for that one, like being, big, drop in price. That's not going to happen. I feel like this is probably as low as prices will be. So if you're looking to buy at the low of the market, I feel like this is the time, because as soon as rates drop, it's almost like a guarantee. It's like these factors work well together. You can imagine how many other people are waiting for rates to go down. And with the amount of, activity we've had this year, we've had like such low levels of activity, which means there are a lot of people who are waiting to make a move, but they're just waiting for rates to go down. And as soon as rates go down, then the competition and those multiple offer situations come back. And I'm not saying this to put pressure on anybody. I'm just saying the truth as a professional, as, if I was, most cases when I'm giving examples or when I'm answering questions, I think about if I was in that position, what would I do? So by no means am I trying to put pressure, because I know that some people put pressure on people to make them take action. That's not what I'm doing. I'm just telling you the truth. What is likely to happen. And when you look back 5 to 10 years from now, you'll see that what I said will be the truth, So if you're a first-time home buyer, I would say start looking into what you can afford. Connect with proper professionals. Could be a mortgage broker, could be a realtor. Connect with those professionals. And I would say if you can afford something, move now. Buy something now. I know your rate will be higher. That's okay. Rates are coming down. Okay. Sometimes also I want people to think about what's happening in our economy. Let's say if all these things weren't happening, if let's say inflation wasn't coming down, if unemployment was still low, you have to think about also like our political situation right now in this country, where we're coming up to an election in 2025, and the liberals right now who are in government, they don't have the support that they would like, or the kind of support that they've had in the past. So for rates, affordability issues to stay so high, I think that things will get better so that they can get the votes that they need. Another thing too, the US election is coming up. So that's also something that I watch. Like I'm always watching all these points and all these factors. When the US is also going to be in the same position where people are not happy to vote for any party when prices are so high, rates are so high, businesses are struggling, everybody is struggling. That is not a situation where voters are happy to go to the ballot. So I think that all these factors combine to give more like a certainty that things will definitely improve in 2024 in preparation for the election coming up in the US as well as in Canada in 2025. In addition to that, we also have all these indicators that the economy is getting to where the Bank of Canada wants. So if somebody was to ask me to guarantee if rates will come down, I'd say, look, everything points to rates coming down. However, nobody can guarantee anything because this is a prediction. Okay. So I hope I answered that question. Moving on to the next one. Short-term fixed rate mortgages are growing in popularity since everyone expects a drop in mortgage rates. What are your thoughts? That's true. And as I said, you'll notice that this short-term, let's say this is referring to like a 1-year term or 2-year term, 3-year term. You'll notice that those are more expensive. So you will pay a higher rate for getting a 1-year term or 2-year term. In fact, in some banks, they don't even have a 1-year term, right? They're forcing people to sign up for like 3 years or 5 years. But yeah, they're gaining popularity because rates are going to come down. If you see those predictions from the 6 big banks, they know it too. They're predicting the rates will go down. So I would say probably instead of getting even like a 1, you can kind of look, because every situation is different, what they're proposing. When I go to a mortgage, when I go to get a mortgage, I tell them to give me all my options. Give me what a 1-year rate will be. Give me what 2-year rate will be. Give me what a 5-year term will be. Give me what a variable will look like. Variable open, variable closed. I want to see all those options, and then I'll do my numbers. Okay, so that's probably what I would do, but I'm not gonna lock in at 5 years, because you have 5 years of paying one of the highest rates we've seen in 20 years. Like if we go back here, you'll see, like in the last 20 years, this is the highest. So basically, so rates are right now around 5%. This is the highest it's been since like, 20, like, I don't know, like in the longest time. So if you're locking in here, you're locking in at the highest rate we've had in more than 20 years. So why would you do that? Even a 3-year term right now, I would think twice before I sign up for something like that, because the banks themselves are predicting the rates will go down. So that's probably why. Like I would probably, like the most I would take is probably like maybe a 2-year term. I would consider that, but I would probably just go for a variable. It's going to be painful in the short term, but it's going to make sense in the long term. Okay. Going on to question number 3. I'm looking to buy my first home, but not sure what to do. Prices have fallen, but the rates are all high, making it scary to invest. I understand why it's scary. But if you look at the big picture, as we talked about this, I'm pretty sure I've already answered this question. I believe there's one of the big investors, I can't remember who says, you always dig when everybody's zagging, which means when nobody's buying, that's the best time to buy. And when everyone is buying and there's multiple offer situations, that is usually a hard time to buy if you're looking to make a return on investment. Are construction costs cooling? How will the pre-construction market behave according to you? So the pre-construction market is actually very interesting. If you look at their prices, pre-construction prices did not come down very much. So if you had bought a pre-construction, and I've bought some pre-construction myself, so I'm seeing that what we used to buy them for in 2020, 2021 is quite comparable to what we're buying them for now, except builders have become more creative. So they're offering more perks. Like sometimes they'll finish your basement for you. Usually builders don't finish basement. So they've been adding in things like that to encourage people to sign up. I've even seen one of the builders who's guaranteeing a 2% interest, 2% mortgage, which kind of smart on their part, because they overcharge you for the house. And then because they're also looking at these predictions and knowing that by the time the house is ready, they guarantee a 2% rate. So they give you a 2% rate. Anyway, what do I think will happen? I think right now where prices are, they probably will stay there. They haven't come down. Like these fluctuation that we're seeing in prices, if you look at builder prices, they haven't fluctuated as much because builders have been able to stand their ground and say, this is how much we need. Now, if you're looking for deals in pre-construction, there are builders that need to sell some inventory, because for them to get a loan, like a construction loan, you have to sell a certain percentage of inventory. So in a case where there's motivation for the builder to sell, we are seeing some interesting things where, even the deposit structure is relaxed. Maybe they're even asking you to just pay $5,000 every month for the next how long, I don't know. Basically right now, it's the best time to negotiate better terms with the builder. It's the best it's been in years. Will their prices go down? I think there's a lot of inventory to be sold. So I don't see their prices going down, but I also don't see them going up right away because there's a lot of inventory to be sold. There's a lot of builders who had land and plans ready to go, but because of where the prices are and how the market is, they aren't selling as fast. You also have to remember who buys a lot of pre-construction. A lot of investors buy pre-construction. And right now, a lot of investors aren't buying just because the situation is not conducive for them to buy. But you also have to think that builders are business people, they're businessmen. As soon as they see that the rates have come down, demand is increasing, their prices will go up too. So I'd say, you know, it's a two-edged sword. For me, to be honest with you, if I'm to be honest, if I have the money to buy like an already built home, I will probably prioritize that to a new construction, because I don't know if you know this, but every time you buy new construction, you are paying more than what the property is worth. In most cases, on average, about 20% more. So if you're buying a condo in downtown Toronto, or you're buying a condo in one of these buildings that's gonna close, let's say in 3-4 years, you're paying a 20% higher price than you would have paid. Now, it makes sense for people who are still working on setting up their down payment, still working on the different things. However, if you have the money, you're ready to go, you can get that same property for much less. In fact, right now, do you know who is in most pain? People who bought pre-construction and are closing. We're seeing a lot of these new units sell for much, much less, you know, much, much less than what the buyer paid for at that time. But now they're in a position where they can't afford, they can't keep up with the payments, and they're having to sell. So for those people who are looking for new homes, you can still get a new home at a lower price without having to go through the builder, because builders are business people and they will not give up an opportunity to make a profit. Okay. Question number 5. Bank of Canada held mortgage rates today. Do you think, what do you think they'll do in Q1 of 2024? Well, nobody can really predict what will happen in Q1 of 2024, but if I was to guess, depending on where the economy goes, I'm probably thinking that they will hold again in Q1, and maybe they'll start to relax things in Q2. So that Q1 is like January to March, and then Q2 is April to June. So I'm thinking probably if we see any, you know, reduction in rates, but it also depends on what happens between now and March. You know, something could happen where the economy is in a crisis and they lower rates right away. But what's for sure is that regardless of what the Bank of Canada is doing, right now, the big banks have started to relax their rates. Like, it's easier to, as I said, as a first-time home buyer, my mortgage broker was telling me that somebody could even get a rate that starts with a 4, but that's for a 5-year term. So I would say for sure going into 2024, it's a more optimistic story than we had going into 2023. Okay, so question number 6. I was looking at buying my first investment property to generate positive cash flow. I have 20% down for 600,000 property. What location should I consider outside GTA? Okay, so this is a very specific question. I would say connect with me so we can look into the numbers, because one of my specialties, as you know, is real estate investing. So this person has 20% down for 600,000 property. They're looking at locations outside GTA. Myself, to be honest, I like all these 3 markets that I mentioned, you know, Guelph, Kitchener-Waterloo area, Hamilton. I know there's a group of investors that are going to Niagara, but what I see is Niagara prices right now, they're struggling. Prices have come down more than they have in these regions. When I show you the graph, like, there are areas where prices will just come down so much more compared to the other cities. And one of the reasons is because Niagara is just too far from Toronto. You know, nobody would live in Niagara and work in Toronto. I actually had a friend who tried to do that and it didn't work because of the distance. People would rather be in Hamilton because it's closer and it's easier. There's, you know, if you're looking to commute to downtown Toronto, there's a bus every 30 minutes. So I'd probably be looking at things like that. I like Kitchener-Waterloo, Guelph. Guelph is actually one of my favorite. Like, if you look at this graph where prices, like the way prices are fluctuating, you will see that even with the fluctuation, Guelph prices are still holding up. Like that's the Wellington County. So that's the green line. You'll see that prices are still higher on average, but there are times when prices were like almost comparable, you know, to, for example, with Waterloo region. Waterloo region is the gray graph, and you see that Waterloo region did really well at the height of the market. You see the average price of a home in Waterloo and Hamilton were higher at one point than Guelph, but both of these have fallen and Guelph is still holding up, you know. So I like Guelph, and that's kind of where, you know, some of my properties are. But the beauty of it is also that rents in most of these markets are comparable. So it really depends on a few other factors. Also depends on where you live. I like to be within an hour from my properties. We used to have some investments in Niagara, but we got out of that market just at the right time. Like we sold our property at the height of the market, you know, and I like to, and one of the reasons why we got out of that Niagara market is because too far. Like I don't like to be too far away from my properties, you know, and you know, that's a personal preference, but some people don't mind, don't care. But for me, I like to be at least within an hour from where my properties are. So that's why we got out of the Niagara market. But we got lucky because the Niagara market went down much faster and it dropped more than all the other markets that we're in. So if somebody is looking to buy and they're thinking about what market to be in, I'd say connect with me. There's a few things we need to look at. We have to look at where you live, proximity to one of these markets. And we also have to look at, you know, sometimes I just look in all three markets and see where the deal will be, right? If you get a much greater deal, let's say in Hamilton, then why not? If you get a much better deal in Waterloo, why not, right? If you see inventory, right now, there's a lot of homes on market. And if we look at inventory numbers, okay, this is where inventory, you can see like the number of homes on market. You see Hamilton has the highest inventory, almost like, you know, 4 times or 3 times that in Guelph. So, and also it could be because Hamilton is a bigger city, right? So you definitely have options, and the more homes you have on market, the more flexibility you have as a buyer, but also the more bargaining power. You can negotiate with all these sellers who are looking to sell with homes sitting on market for a long time. Okay. Alrighty. Hopefully I can get through all these questions. Oh, I have 2 more minutes. Okay, so I'll answer one more question. And the questions that were submitted ahead of time that I don't get to answer during this webinar, I'll just reach out to them and answer it one-on-one. Let's see. So let me just choose one. So there's a question here. Is it still advisable to invest in area far, far away from GTA with the fall in prices? Oh, like given what the market has done, is it still advisable to invest far away from GTA? What is the most upcoming area outside GTA according to you? Okay, so this question, I guess, follows up on the question that I just answered, where it's like where people are looking for a place to invest, where should they be? I probably would say definitely outside GTA, because when you look, you know what's interesting? A lot of people who live in GTA don't know this, but rents in these areas, like areas like Kitchener, Waterloo, Guelph, even if you look at Hamilton, in some cases rents are comparable to what you would get in GTA, but our price is like 500,000 less. So when you run your numbers, I'm a numbers person. So all these things I'm saying are backed up by numbers. So if we're looking at deals as an investor, because I think most of these questions are coming from investors, I will look at your numbers. If you can find a better deal in GTA and it's closer to where you live, why not? But in most cases, you will not find that, because everybody who lives in the GTA is also looking for that. So in most cases, you have to step out. What I've seen is there's a sweet spot somewhere. You don't have to go as far as Windsor. I've seen people who live in the GTA, they invest in Windsor, or they invest in, you know, in Niagara. Like those areas are good. Investors have done well in them, but it's just too far. And when prices go down, they crash. People have invested in London. London right now is struggling. And how do I know? Because I have friends and colleagues who have, you know, invested there, and prices there are just struggling to recover. Even when our market recovers, London is just slowly coming up. Why? It's just too far too far, right? So, and also some of those markets, they got so popular when the market was at the height that those prices were overinflated. So now they've corrected, they've come down to where they should probably be. Okay, for me, if I was to invest right now, I would not go to those markets that are too far. I'll probably go for that sweet spot where it's like within an hour drive from GTA or within an hour drive from where I live. I think that's, for me, that's always a criteria, because I know that, you know, it's easy for somebody who lives in GTA to, or who works in GTA to still commute to work. That is something that people are looking for. And guess what? The prediction right now, I didn't put that information in here because I had to cut it to like 1 hour. I don't want to speak for 2 days, but there's a prediction that we'll see one of those like GTA emigration is what it is, when GTA people are leaving and buying elsewhere. So there's a prediction that areas around GTA and the commute trend that we've seen, that is coming back. So that's kind of what people are predicting with these fluctuations, that we'll see more of those GTA buyers come to buy in areas around GTA. Why? Because GTA is probably going to go up so high, people can't afford it and they need a home and they have to buy elsewhere other than GTA. Anyways, this has been a good webinar. I wasn't expecting to talk for this long, but I'm always happy because, you know, people are sending in questions. I'm here to educate. It's one of my passions. If I can add value to your real estate investment goals or real estate buying and selling goals, that's always my pleasure. So thank you for sending in all those questions and for staying engaged throughout. I'm always happy to connect if anybody wants to. Otherwise, I wish you the best of luck and I wish you a great evening tonight. Thank you again for being here and take care.